All right, what's going on, guys? It's Luke here. Today we're going to run through a market breakdown, and then I'm going to go over this quick PM trade that I took. I had a great day today of trading. Again, guys, I break down the market every single day like this in the Discord, so if you guys want to join, links in the pinned comment. And let's get right into this. So starting off on the higher time frame, I was leaning bullish until proven otherwise. Why? Because we are trading towards all-time highs, obviously. We still have a ton of higher time frame draws and liquidity. I have a ton of stuff marked out. But yeah, on the 4 hour, we were trending bullish. We were respecting it at market open out of this 4 hour gap right here, but we had this gap as an unfilled that I was looking at as a sell side target for price to potentially retrace into to look for longs, which is what ended up happening. And then for buy side, we had these highs right here, these highs right here. We had London high, and then we had some higher time frame draws leading up to those January highs, which you could see got left edged. I'm assuming those will get taken out. So what happens, okay, market opens up and we initially get a manipulation up. Wait, why is it get here? Let me refresh the page really quick. And hopefully that fixes it. Okay, so initially we get a manipulation to the upside and we put in these wicks right here. We end up tapping into, I believe it was a 15-minute bearish fair value gap. Yeah, we had a 15-minute gap right here. We respect, and from there we just start dumping down. Now I don't want to enter this candle right here, but if you did short this into the unfilled gap, I think that's a solid trade. But personally for me, I just didn't like it. We kind of took out the break even, which I would have wanted, and it's against the higher time frame narrative, which I was kind of eyeing. So if I wanted to continue, I would have preferred a continuation play. So from there we pull back into a 3-minute gap. So as you can see, I don't have it marked, but we pull back into a 3-minute gap, and you could have targeted into the unfilled 4 hour. I liked this short personally. I just missed it, but I think this was a solid short. Obviously you could have gotten chopped around in here, but I think this was a solid short. You get that 1 minute change in the state right there, and you could have gone like this. You could have gone break even at this low right there, and you could have held down to the midpoint of the 4 hour gap, so CE, and you would hit a 2.3 trade in literally like 3 minutes. I just missed it, unfortunately. I kind of hesitated on it, and again, I just was wanting to, like, I don't know, I didn't want to I wanted to stick with my long bias until I was like seeing something that was so obvious. I think this is a great trade looking back, but in the moment I just kind of hesitated on it. From there, price taps into CE, the 4 hour, and then from here, I was just looking for volume and recovery. Obviously, you don't want to just spam along out of here. You want to wait for something because price could easily keep flushing down towards that next unfilled 4 hour. Just give me 1 sec. So after respecting out of CE, we see that ES was also respecting out of CE. I was looking for kind of confirmations that potentially look for longs. We were stuck within this 5-minute bearish fair value gap right here. So I wanted to see price kind of trade through this. So you could see we inverse it right here on the 10:30 candle, but at this point I personally didn't want to long until we were out of this 5-minute gap. I wasn't sure if this was going to send price lower, so I wanted to see us trade through that. So this is the first trade I end up taking, which gets break even. We get that 5-minute inversion right here. We get a retrace back into it, and I took the entry off this 3-minute. We get a nice 3-minute CISD right here. I thought this was a solid trade. We're clearly breaking out. This is more discretionary. We get a 3-minute CISD, have a break even point where I can, run stops, break even really quick. So I go in here, and I was targeting the 930 wick. I went break even after we took this 930 or this wick right here, and then got break even. But again, I think this was a solid trade regardless. I wouldn't again take anything in here until we kind of inverse that 5, because that 5-minute bearish gap could have easily sent us lower for at least a resweep at that point, right? So from there, I'm still confident in price going higher. Now this was the trade of the day. I think a lot of people took this one, but if you were on MNQ, you might have gotten screwed. I was very lucky. If you guys see my trade recap, I forgot to set my stop until after, so I got very, very lucky on that. So let me run through this. Basically, price came back. We broke out of this range. We tapped into this 3-minute. I was looking for a continuation to the upside. What did I enter off? I don't know why that's no. I took this 1-minute inversion long right here. I didn't even have a stop set. So luckily when this candle wicked down, I was lucky enough to still be in the trade, break even here. And then I held all the way up to 930 wick to London. And then my trailing stop got taken out. Obviously it ended up flushing even higher. I did want to hold till here, but then I ended up getting in this continuation long. But I think this was a solid continuation play as long as you didn't get screwed by MNQ. This, is a textbook continuation. We're in an uptrend. We retracing with 3-minute gap. You get your entry confirmation out. If you did take this on NQ, you should have been fine. 1-minute inversion. to the upside. You could have ran your stop. I personally wanted my stop below the 5-minute wick, so you just would have been safe. Basically, you just would have been safe, just to give it a little bit of extra room. But yeah, from there, I think this is a great continuation play. And if you did get stopped out on it, still regardless, I think it's a great continuation play. In terms of re-entries, you could have also got this 2-minute CISD. This was great too. You could have gone for a quick break even and then continue to hold. So that was price from there. From there, we end up flushing to the upside, obviously, and we end up taking out that 930 wick. In terms of other entries, you could have taken this 3-minute close right here. I really probably wouldn't, because you're kind of just in the middle of nowhere. But if you've seen that 930 wick, you had conviction, you've seen the volume in our favor, maybe you go for this right here. You just see the breakout and you take it to the 930 wick for a quick 1-to-1, something like that. So from there, we take the 930 wick and we displace past it. What do we expect here? We expect price to potentially continue higher because we still have draws on liquidity higher. So at this point, we had taken out this wick, we had taken out this, but we still had this high right here. So what happens? Price comes back. We get a retrace into, one sec, a 15-minute gap. So what do we expect off this 15-minute gap? We expect price to continue higher because we're in an uptrend. We were in bullish order flow in the higher time frame. So price taps into this 15-minute gap. I take a quick entry. This was just with like micros to secure a winning day on the 1 minute. So again, this 1 minute inversion. You could have taken the 3 as well. I just went for the 150 day, but again, you could have definitely scraped the 1-to-1. And even if you went for the 3 minute, I think you could have gotten a decent trade if you ran your stop a bit higher and then you just ran the 1-to-1 even, or if you held, yeah, you would have got break even otherwise. But if you went for the 1-to-1, you would have been fine right there. From there, price obviously continues to the upside. And again, we come back into a gap. You can see we tap into this 3-minute gap right here. Sends price higher again. And then we end up edging that January high. So from there, off of this gap, I don't know. I didn't really see any entries there. I wasn't on the charts at this time, but I'm sure anything you take there pretty much is going higher. From there, we edge that January high, right to like literally to the tick. From there, what happens? Price starts trading down. There was actually a decent opportunity for shorts. I think it was right here. Yeah, we leave these relative equal lows right here. At where is this? 429. We pull back into this 2-minute gap right here. This is around 2 o'clock, and then I think there was a decent entry. I remember looking at this. You could have taken this 1 minute CISD right here, stops right here, break even at these relative equal lows, and then you could have held down to these lows over here or something like that, and you would have hit about a 3-hour trade, which is pretty crazy. You would have had a clear break even point at these relative equal lows. I think that's a great trade. And then this is the PM trade that I took. This was on my Apex account. So if you guys haven't traded the end of day accounts, you basically have to place a trade every 30 days. And I just passed a few. I haven't worked on those Apex accounts. I had 3 that were pretty much dormant except for the other ones. So I was like, okay, I got to place a trade on these. And this was basically just in line with the higher time frame bias, right? So what do we have here? After hitting that 4-hour gap, we left relative equal highs with that January high. I expect that to get taken out, especially with the higher time frame uptrend. Now, if we pull our fib from here to here, we respected the 705 level perfectly, and we respected a 15-minute first presented fair value gap. So let's go over to ES, and it's the exact same thing. ES is also respecting a 15-minute first presented fair value gap, and then if we pull from the fib here, we're also respecting 705. Okay, so I was like, okay, we're respecting the 705 perfectly and a 15-minute fair value gap. If you look on the lower time frame, we have draws that we can target. We have a clear break even point. So I'm waiting for volume to basically kick in because I'm still bullish. So the highest time frame inverse here was this 5-minute, but I didn't wait for the 5-minute personally. You could have taken the 5 and it still would have worked fine. But I took the 3-minute just because I usually prefer to enter on the 3-minute. So I got this 3-minute inversion right here. Ran my stop below the 3-minute candle, break even at these internal highs, and I just literally went for the winning day, and that was it. I made like 275 per 3 accounts. I did want to target this wick right here, and it would have played out. I would have made, I think my total would have been like 450 or so on each account, but it is what it is. This isn't like, it wasn't like an ideal trading time, obviously, but this would have been the trade. But I think this is a solid trade. You're expecting a higher time frame, OTE level, clear displacement, 15-minute first presented fair value gap. I think that's a great trade. You have a clear break-even point as well. So worst case, you get break-even. But if price is going to flush in your direction, it's likely going to work. Again, I got out like, I don't even know, somewhere around here. I can't remember what I had, but yeah, I think it was 49. Yeah. So about 45 points or so. So that's it for the day, guys. Again, a lot of opportunities. I'll run through it really quick. I think the trades of the day, not a fan of this 931 short, but I did like this short right here at 950. If you did target CE the 4 hour, I think that's a great short. You would have gone break even here. From there, we deliver out of CE. Again, I'm not trying to long anything until we get through this 5 minute. From there, you did get this 5 minute inversion right here. You could have honestly just longed this 5 minute at 1030. But personally, I'm not really a fan of the 5 minutes. From there, this 3 minute CISD, I got break even on it. Looking back, it's not the greatest, but from there we get this retrace into this gap, this 3 minute. I think this is a great long. Again, if you didn't get screwed by MNQ on this 1 minute inversion, you probably could have taken this re-entry right here on this 2 minute close, went for a quick break even, targeted the 930 wick because the 930 wick was still a valid draw on liquidity. And then from there, I think anything you got in here, we pull back into this 5 minute. Same thing again, that second trade that I took on that 1 minute. Where was it? Where was that trade? I don't know. Anyway, anything you took on that pullback I think was great. And then I was a fan of this as well. I think this was great. We pull back into the 705, respecting that first presented fair value gap, and then we get that 3 minute inverse to the upside with clear displacement, clear break even, and then go for it. So a lot of opportunities in the day. Again, I'm still going to be banking on longs until proven otherwise. But that's it for me, guys. We'll be back at it tomorrow to end the week off, and I'll talk to you guys in the next one. Peace.